Hello, stock market enthusiasts. Let me tell you today about the most underrated valuation weapon, which is the Peter Lynch's PEGY ratio. This valuation tool almost no one uses, but the greatest fund manager of all time, Peter Lynch, relied heavily, and it's called PEGY ratio. Most investors stop at P ratio. Some advanced investors use PEG ratio, but the true pros, the ones which understand long-term wealth creation, look at PEGY ratio. So what exactly is PEGY? PEGY is equal to the PE ratio divided by earnings growth rate plus the dividend yield. It answers one powerful question: am I paying too much for the company's growth and the income it gives me? Let's take a simple example. Imagine a company with a PE ratio of 20, earnings growth of 15, and a dividend yield of 2%. Now let's calculate. PE ratio is 20 divided by 15 plus 2%, which is 3.33. Now let's interpret. PEGY less than 1. That means it is an undervalued gem. The growth you are getting is bigger than the price you are paying. PEGY is 1 to 2 means it is fairly valued, reasonable to accumulate. PEGY is more than 2, which means the market may be overpricing the stock. You are paying a premium that may not be justified. In our example, PEGY is 3.33. That means even with dividends included, the stock may be expensive compared to its true growth potential. Let us understand, why does Peter Lynch love this metric? Because it blends valuation and growth plus shareholders reward into one number. Markets often reward growth stories but forget dividends. PEGY stops you from overpaying for a story stock. It forces you to ask, is this company actually growing, or am I just buying the hype? Now, what is Elysian's expert's insight as always? At Elysian, when we evaluate growth companies, PEGY acts as a reality check. The company's narrative might look fantastic, but if PEGY shoots above 2, we pause and ask, is growth story slowing? Are valuations overheated? Is dividend policy masking weak earnings? Is the risk reward still in our favor? In volatile markets, PEGY is a compass. It keeps you away from expensive excitements and guides you towards reasonable compounding. If you found this video intriguing and valuable, this channel is your shortcut to becoming a smarter investor. Hi, this is Prabhanjan Rao from Elysian Investment Advisory.